YouTube, what's going on, guys? So in today's video, we are going to cover the steps on why you should and how you should create a trading plan. This is a necessity before you start trading. So even if you did start trading, it's never too late, right? So make sure that you watch the whole video, and if you enjoy, please like and subscribe. Helps me out a lot. Let's get into it. So first step, how to create a trading plan. So as you can see on the left hand side of the screen, I labeled it out here, 7 steps that you should follow. I combined 4 and 5 in this presentation because they do kind of go hand in hand. So step number 1, outline your motivation. Step 2, decide how much time you can commit. Step 3, define your goal. Step 4, choose a risk to reward ratio. Step 5, decide how much capital you have. Very important. Step 6, assess your market knowledge. And step 7, start a trading diary. So first step, always have a trading plan. I cannot say this enough. If you do not have a trading plan, take a step back, go write one down. After you watch this video, you'll know all the steps in order to do this. Why do you need a trading plan? When you have something written out, it is just known, it's studied that something that you have written out, it will make you more successful. It makes trading easier. You have everything done up front so you can follow everything going forward. Decisions become easier to make. You know when to take your profits and you know when to cut your losses, right? So doing this removes emotions, and everyone knows when you're trading with emotions, you're screwed. So, right? So you want to make sure that you have preset rules before you start trading. And in doing that, your trading discipline will be great. And then if you continue to do the same thing over and over again, you can then find out what works and what doesn't work and rule out what doesn't work, obviously, and continue to improve on the things in your strategy that are working. Which then leads me to there's room for improvement, which is basically what I just covered. You can learn from your mistakes. And learning from your mistakes is the best possible teacher there ever is. We all make mistakes, especially as a beginner trader. You're going to make a ton, but this is where you take that experience, you write them down. Writing everything down will totally help you, and you learn from them. And you don't make those mistakes again. And when you do, you have to realize it, you write it down again, and hopefully going forward, you do not do that again. On to the next. Outline your motivation. So you need to figure out why you want to trade, right? So you need to figure out, what are you doing this for? Are you doing this for long term? Are you doing this just as a monthly thing where you deposit a certain amount of money into a fund, a Roth, or an IRA, and you just want to do this long term, right? And you just want to watch your money go up as the market goes up? Or do you want to be an active trader, a day trader, a scalper? We'll go into that a little bit later. So you need to ask yourself why you want to become a trader and write it down, right? We're writing down everything because this will definitely help you. How much time can you commit? So this was a really major thing that I had to focus on. So I used to work a 9 to 5 job, 9 to 6, 9 to 7, honestly. I worked pretty late, and I wasn't able to actively manage my trades. So I had to develop a strategy that works around me not being able to actively manage my positions. So this is something that you need to consider, because this is major. You don't want to enter a position, right? Let's say market opens, you enter a position, and then you're stuck in a meeting and you can't exit your position and you just lost all your money, right? That sucks. You definitely don't want to do that. So make sure you develop a strategy that revolves around your schedule. So define your goals. Goals are something that should totally be written down, right? Whether it's regarding trading or just something in life, a relationship, whatever it is, totally write it down. I use the acronym SMART. It's something that has stuck with me for years now. learned that, and it has just been amazing. So SMART stands for specific, measurable, attainable, relevant, and time-bound. Every single goal that you set should follow these guidelines. So I included an example on the screen. So I want to increase the value of my entire portfolio, that's something specific, by 10%, which is measurable, that's attainable, and relevant, right? 10% is totally possible. And in the next 12 months, so that's time-bound. So we are giving a very realistic, specific, measurable, and a time-bound goal. And doing this, right, this can help you follow your goal and stick to the long-term path. So next is the different types of trading styles. You should always decide what type of trader you are or what you want to be, and your trading style should be based on your personality, your attitude to risk, as well as the amount of time you're willing to commit to trading. So that goes hand in hand with the slide we went over just before. And I have listed here the 4 different trading styles, or the 4 main trading styles in the current market. Investing, right? So you hold positions for weeks to months, even years, right? So this is a long-term strategy. Swing trading, holding positions for several days to weeks. You are taking advantage of medium-term market moves. So you would be known as a swing trader. If you play options, you would take trades 2 to 3, 4, even 5 months out, right? That could definitely be known as a swing trader. Day trading is opening and closing small number of trades in the same day. So you don't hold anything overnight. You eliminate risk. I personally love to day trade now that I have time due to COVID and I work from home. And day trading allows me to sleep well at night. Scalping. You place trades that last a few seconds or a couple of minutes, and you take advantage of small price action. Choose a risk to reward ratio. So this is extremely important. You really need to pay attention to this. How much risk do you want to take? So are you willing to risk a lot? Are you willing to risk a little? Do you want to be more on the safer side? So you really just need to evaluate how much capital you're willing to put on the line, which goes hand in hand with how much capital do you have, right? You should never risk more than you can afford to lose. There's plenty of risk with any trading, especially if you trade options in the equity markets, and anyone can lose, right? A beginner, a expert, anyone can lose. And you always want to make sure that you are protecting your capital. You always want to be a defensive trader, and you always want to be a risk first trader as opposed to a profit first trader. You always want to defend your capital. And it's even possible to lose more times than you win and still be consistently profitable. This all comes down to risk versus reward. Traders that use a risk to reward ratio of 1 to 3 or higher, right? That means the possible profit made on a trade will be at least double the potential loss. So for example, if you're risking $100 on a trade and the potential gain is $400, your risk to reward ratio is 1 to 4. So in that case, you can lose more trades than you win and still continue to be profitable. Sounds great, right? So this is something that you definitely need to focus on. Next up is you should always assess your market knowledge. Are you experienced? Are you an expert? Or are you a beginner? Are you just learning? So you should always evaluate that and consider that. Make sure you know everything that's going on within that market you're trading. So if you're trading stocks and equities, you always want to be aware if there's an earnings coming up, or if the Fed is coming to speak, or if there's any significant event that can impact the price of a stock. If you're trading crypto or Forex, right, you should always know everything that goes on behind the scenes within that market. So, right, so you always want to make sure that it's the right choice for you. And last but not least is start a trading diary. I believe that this is the most important one out of all of them, just so you have everything written down. You can see what your trades are. So my personal trading diary consists of the technical details. So I post the entries, the exit points, at what price I entered the trade, the rationale behind my trade, as well as once I exit the position, I usually even write down my emotions. This helps me track everything and improve upon my mistakes, improve upon or even study my mistakes and study what I did right. And this really, really, really has helped me develop and become an expert at trading. So, with that being said, I really hope you learned something. I hope you enjoyed the video. If you did, and if you are still here, please drop a like, please drop a comment for the algorithm, or even drop a question. I really appreciate the support, and I hope you all have a great day. Thanks. Before we get started, if you watched my AMC video a couple weeks ago, maybe even a couple days ago, I'm going to start doing these raffles where I pick someone from the comments and I'll do a free one-on-one session. And last video, Best Tank won, but he never answered, or he or she never answered. So I'm going to re-roll from that video. So I have selected the URL from that video. I am filtering duplicate users, and we're going to pick someone new. So here we go. So here we have the winner. So congrats. Please DM me on Discord, Twitter, YouTube, whatever it is. Please DM me within the next 2 or 3 days. Otherwise, I will re-roll once again. So congrats.